Hey everyone, it's Daniel here from etfs. Hope you're all doing well. So here's an interesting article here. It comes out from Bloomberg. Basically says, biggest junk bond ETF attracts most cash since 2020 as rally builds. This is the perfect storm here. Like I was saying in my previous videos, especially in my melt up video, right? Check that out. I did a video on the melt up in stocks, right? People are starting to feel a little comfortable here. World Bank is saying, hey, this year is going to be fine, growth's going to be fine. And you're hearing the narrative that, hey, chase AI, chase NASDAQ, chase these tech stocks. We're 11% away from the highs in S&P 500. So time to pile back into risk assets. Hence why you see articles like this saying that a lot of money flowed into this junk bond ETF. What is a junk bond ETF? It's basically this ETF that has a pile of very shitty loans, very shitty debt, shitty bonds with poor ratings, but pay a high yield. And generally, if you're getting into those kind of bonds, in my opinion, I would think, again, I'm not an investment advisor, so always get an investment advisor before making any financial decisions. But my opinion is, why would you be buying this in times when there could be a really severe hard landing in the economy down the road? But that doesn't stop basically more than $2 billion flooding into this ETF. The ETF ticker is HYG, basically erasing 2023's net outflows. So this article basically says more than 2 billion, like I said, flooded into 17 billion iShares iBox high yield corporate bond ETF, tickers HYG, just last week. According to data compiled by Bloomberg, that was the biggest haul among fixed income ETFs and the HYG's largest weekly influx since November of 2020. So people are starting to feel bullish again. Okay, very interesting. The renewed appetite for HYG, which had been sitting on net outflows, and it was being hammered a lot, and a lot of investor monies were piling out. So the outflows of nearly 1.2 billion prior last week arrives even though there have been several high-profile warnings about a coming wave of defaults, rating downgrades, etc., etc. Despite the red flags, a series of strong economic prints, such as Friday's NFP report, right, the blockbuster's jobs data, convinced investors that it's safe to venture back into riskier credit, according to Wells Fargo Investment Institute Samir Samana. And it says one possible bull case is that the economy remains resilient today. Investors may not need to worry about the recession, like I was saying in the beginning, until later this year, right? So again, what is the theme? Again, going back to what I was saying, World Bank, going back to what this article is saying, is that, hey, no recession this year, right? Think about it in this way, okay? Isn't it interesting? Think about it. Isn't it interesting that 2022, everybody and their dog was bearish on the markets and the economy. Everybody was talking about the recession, and we didn't get it. A lot of people said Q1 of 2023, the crash is coming. It's coming. You better be prepared. I guarantee you, you better short. You're going to make a lot of money from this. And what happened in the first quarter of this year? What's been happening in the beginning of this year? The complete opposite. NASDAQ's up 30-40%. Meta is up 100%. A lot of these tech stocks are up. The S&P 500 is about 11% from all-time highs. Apple makes all-time highs, right? Nvidia jumping, reaching the $1 trillion mark. Complete opposite of what everybody's been saying, which tells you one thing, really, that the consensus is always wrong. Usually people, majority of the time, the herd mentality is usually wrong. And that's what I'm learning from this. Maybe you're also seeing the same thing too, right? So if the consensus now is shifting towards things are fine, World Bank says it's fine, hey, the Fed and Bank of Canada says it's fine. The Ministry of Finance of Canada says Canada is the best economy to weather any recession or storm. We're going to have the softest of the softest landing, not to worry, right? And then you have people piling in billions and billions of dollars into the HYG high risk, high credit ETF. What does that tell you? What do you feel, right? Already, I'm giving you a platter. I'm showing you what happened in 2022. And I'm showing you now what's happening in 2023. Everyone thought the world was ending in 2022. We got the complete opposite in 2023. Now everyone's thinking that, hey, everything's fine. What do you think is the likely scenario down the road of where this could end if the consensus and the herd usually tends to be wrong or late? I mean, long term, don't get me wrong. I'm not saying that, I don't want this to be a fear-mongering video, and I'm not saying that, hey, you know, we're forever going to be in a crash. Of course there will be reversals. Of course the economy and the world and the country and the stocks and the assets will continue to go up years and years and years from now. Of course, you know, it's better to be invested and to take your money out of cash because cash is depreciating every year. Inflation's eating up into your cash, eroding your purchasing value. I'm not saying that never ever invest and blah, blah, blah. No, I'm just saying the signs of weakness that is coming short term here, and that, you know, usually in history, just taking data, again, I could be wrong, when you tend to see people pile into an idea, usually you don't see it work out. I mean, how many ideas have come out? How many consensus herd mentality ideas come out that don't tend to be true, right? Take China as being the savior of the world, the growth story. China is going to boost growth. Didn't happen, right? Now, you know, same thing, 2022, the recession. Well, you didn't see it in 2023 of Q1, which people were expecting. Right? Inflation was transitory. Well, it wasn't transitory. Well, it's going to be later on, maybe in the future, but they had to do something about it, right? Because it kept going up and up and up. Again, wrong, 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 wrong. And now you're hearing the same thing that, hey, everything's going to be fine, makes me think that maybe everything's not going to be fine. Now, when you look and follow the data, ISM, growth data, you're seeing the weakness there. Why are people rushing to be buying these risky assets? I don't know why, other than the euphoria, other than the FOMO, other than seeing that, hey, look, the market's been up 6 months. I missed out. Let me get in. Well, time is going to tell. We'll see what happens and how this story plays out. I'm curious to know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.